Hello, and welcome to episode 26 of Mo Money, the investing show for millennials by a millennial, where our goal is to educate, entertain, and empower a new generation of investors. We live on the scene in Queens, chasing dreams, bringing the info that you need to know by any means. Let's get down to a
Mo Money market update.
Markets have been sitting in this all-time high range of around 2160 to 2170. Markets seem to be green every day or just ever so slightly red. Oil, on the other hand, has slipped back down to $43 a barrel range. This past Wednesday, the Federal Reserve has decided yet again to leave interest rates unchanged. The big news of the markets this week is Yahoo was bought for around $4 billion by Verizon. Probably forgot all about Yahoo unless you play fantasy football or you still use the same email from when you were 10 years old. They were around this whole time. Now, this week we're going to be talking about money. Last week we talked about the Federal Reserve and all their principal responsibilities in terms of monetary policy, their functions, and all the other junk they do. This week we're going to be discussing one seemingly simple question that is a lot harder than everybody thinks. What is money? If you ask people what money is, they would probably open their wallet and say, this green shit right here, now go get your broke ass away from me. Or open their wallet and say, the green shit that's supposed to be in here, can I borrow $1, man? But either answer is wrong. That is not money. That is currency. The definition of currency, according to Webster's dictionary, is a medium of exchange for money. Money is the representation of human labor, including services, but we use currency to represent that value. That sounds confusing, I know. So what does that really mean? Well, let's first take a look into the past. Back in the early days of human history, the most popular form of business and trade was by bartering. But humans quickly realized it was an incredibly inefficient form of commerce. Unless you're that Canadian guy a few years back who traded that red paperclip all the way up to a house, for that guy, bartering is an entirely inefficient and rewarding form of business. But still, for most, it was not. Why? Because trading goods and services can be a messy game because it's hard to know their real value and it's hard to divide them up. An example that I'm sure everyone is really familiar with is fantasy football. How many hours do you spend going back and forth in trade trying to find a fair value? It takes forever, and most of the time you just end up pissed off and you think you just got ripped off. You want to trade someone LaShawn McCoy for Adrian Peterson. They're not going to do that. But you can't divide up Adrian Peterson and say, okay, I'll make that trade, but I get him back every third week, or I'll make that trade, but I get all his first half points every game. So as you can see, this form of commerce is ridiculous for the most part, unless you're dealing with an idiot. And if we had to find an idiot every time we wanted to do business, it would be well, probably not impossible. I mean, there's a lot of idiots out there in this world, but it'd still be a challenge. Or imagine back in the day, you were a carpenter who built houses. A guy needs a house built, but he only has 2 cows in exchange for your services. You say your services are worth 5 cows. Are you going to build this guy 2 cows worth of a house, then just say, well, that's all you get? Shit, no. That's ridiculous. So humans decided to create currency, which represented their economic capabilities in order to be able to exchange these things easier. The first currency was cowrie shells. I'm not sure if I'm saying that right, but whatever. Used by the Chinese in 1300 BC, then between 1000 and 600 BC, people started using metals and then started printing coins. Of these, gold and silver came to be the predominantly used metals. Now, why did people choose these metals? Because they're shiny and people like that? No, because they are rare, which gives them value. You can't just create gold and silver out of thin air. Now, Mike Maloney, who's the producer and host of The Hidden Secrets of Money, a great series on YouTube, says that currency and money have 5 similar characteristics. Number 1, they are a unit of account, meaning they provide the ability to give things value. At McDonald's, a cheeseburger is about $1. That dollar provides a unit of account for that burger. 2, it must be portable. Dollars are portable in your wallet, and gold and silver coins are as well. 3, durable. Dollars are pretty damn durable. They've been shoved in and yanked out of vending machines, in strippers' booty cracks, up people's nose to blow cocaine, and gold and silver, well, they've been around for thousands of years, so it's pretty obvious, duh. 4, divisible. You have a $10 bill. You can divide that into 10 $1 bills. You have a gold or silver coin. You can divide that into smaller coins of less value. 5, fungible. Basically means identical. If I have $1 and you have $1 and you give me your dollar and I give you mine, we both have the same amount of currency value as before. Likewise with gold or silver coins. But there is one large difference that divides currency and money. Dollars, euros, yens, pesos, all other currencies in the world are what are called fiat currency. Fiat is a Latin word meaning an authorization or a decree. This means that dollars have value because the government, or rather the Federal Reserve, says that they have value, not because they have any actually intrinsic value. Dollars are nothing but, in the words of Dave Chappelle, trading cards with slave owners on them. And they're made of paper, that's it. Now, as we all know, paper has nearly no value because it's not rare at all and it's easy to produce. Could you imagine if in class you asked someone, hey man, could I borrow a piece of gold? The way you would ask them for a piece of paper? That would never happen. There has been thousands of fiat currencies printed into circulation since the Chinese first started using paper currencies way back in like 900 AD or something. All of their values have eventually gone to zero. That's not to say that the US dollar or any other current fiat currency is going to go to zero, but it's also not to say that it won't either. Hey, anything could happen. So that brings us to the largest difference between money and currency, which is the ability to store value. All fiat currencies ever produced that went to zero had an inability to store value. If you tried to go to Germany today and buy something with the German mark, the currency used during World War I, people would look at you and laugh. Maybe someone would buy it for you for the collector's value, but it couldn't be used to conduct commerce. If you found a treasure chest filled with 20 pounds of gold left on an abandoned island, you could exchange that gold for another current form of currency. It doesn't matter how long it was on that island, it stored its value the entire time. So why do we use a fiat currency instead of gold and silver money? Well, the United States used to be on a gold standard until 1971 when Nixon lifted it. First, FDR restricted the gold standards to strictly sovereign countries, meaning that England and France could redeem their US dollars in gold, but MCMO could not. Before the Federal Reserve, the US Treasury printed money that was backed by gold. This was called the gold standard. So your $20 bill was basically like a receipt for a certain amount of gold. And you could use that bill to buy things and pay debts instead of actually just giving people bars of gold. The dollar bill even said backed by $20 worth of gold in the US Treasury. If you wanted gold, you could go redeem $20 worth of gold with your $20 bill. That's where the saying as good as gold came from. Because yeah, it was a piece of paper, but it truly was as good as gold because it was backed by gold. But then you have to worry about storing it, and a bar of gold is not something you just want to have lying around or carrying around. You keep it in a bank and then they'd give you a bill for what it's worth. That's how it worked. The government could not print more money than they had gold because you cannot create gold out of thin air. You have to mine for it and you have to find it. Then 1971 happened and Nixon lifted the gold standard, meaning nobody, not even countries, could redeem their dollars for gold. Now the government and the Federal Reserve were able to produce currency until their machines ran out of ink. Now a fiat currency is not the worst thing in the world, but as always it must be kept in relatively minimal supply. Not so short that the economy can't grow, but not so large that it causes inflation. Probably a bit confusing, so let's put it in terms of Pokemon. I don't know a lot about the game. My mom never bought me the cards, but whatever. I still grew up fine, no big deal. I did some research and found the holographic Charizard first edition was one of the rarest Pokemon cards in the world, which means it's valuable. Why? Well, because people love Pokemon, and because there were so few of these cards printed. If they'd have chosen to print thousands and thousands of these, they'd have no to little value because there'd be so many of them. Everyone had them. This is what happens to all fiat currencies. It tempts governments into printing more and more currency to spend on things like wars, social programs, and bigger government, because the government can do that without needing any gold or silver to back it with. And unfortunately, this has lifted all restrictions of a budget for the US government, because sadly they cannot poof magical gold into existence like a wizard, nor turn other metals into gold like an alchemist. Gold and silver keeps governments stable and forces them to live within their means. Printing money into existence is called deficit spending. Basically paying for things with money that you do not have. Nowadays, money is backed purely by the full faith and credit of the United States. Whatever the fuck that means. Basically, the dollar is a game of confidence. If people lose faith in the dollar and what it can purchase, it'll quickly lose value. Since the creation of the Federal Reserve, and especially since the end of the Great Recession, we have seen dollar currency being printed into an existence at an enormous rate. This has deteriorated the purchasing power of the dollar. Why? Since new dollars are being created, the dollar in your pocket become less and less valuable. Prices rise due to the new infusion of currency, meaning now your dollar that bought you a burger today may not be able to buy you that burger for $1 tomorrow. This type of thing, creating mass amounts of currency by non-stop printing of new currency, was what caused all previous currencies before now to go to zero. If the Fed takes advantage of their money printing monopoly, then our money will be worth as much as the monopoly game money. Nothing. But unlike those currencies, gold and silver were around and is still around today, which makes it an honest and reliably sound money. Not currency, a money. Gold and silver cannot simply disappear. The gold we use today has been around for thousands of years, and you cannot just create it with a machine. Another example of currency is the new internet money, aka Bitcoin. This is basically a digital currency you can buy to exchange goods and services via the internet. It works like a dollar would, but the creators of it have vowed to create a finite amount of them to make sure they retain their value, just like gold or silver. Bottom line, currency that we use today only has value because the government and us choose to give it value. If I do this, it's no big deal, because now it's just a bunch of ripped up pieces of paper. It's worthless. Okay? It's also a crime, but fuck it. Gold and silver also only have value because we choose to give them value. We could use grains of seed or even blowjobs as currency. Hey, how much is that iPhone? That iPhone costs 300 blowjobs. Unless they're good blowjobs, then I'll lower the price to 250. Awful currency. Gold and silver have proved to be the best money for their 6 qualifications I explained earlier. Remember, money is not a real thing. It's simply a value representation of an economic output, whether it be a human labor, a service, or an economic resource. So what is the best way to make more money? Simple. By making your labor or your services as valuable as you possibly can, whatever they may be. Then you will acquire more currency in exchange for them. Thank you so much for watching another episode. You know, we'll be here every week with a new episode. For now, don't forget to like, comment, subscribe, and share. Follow me on Twitter. Follow me on Instagram. Like me on Facebook.
Mo Money, signing now.